the big issue is that a lot of debt was created. A lot of it is government debt, but it is also corporate, to a lesser extent, household debt. Um, 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 if you look at the Silicon Valley Bank issue, it's not so much their issue as much as a worldwide issue. And what happened is that, what's a bank? A bank takes in deposits, and then it takes that money and it invests it in things. And so they bought a lot of government bonds that had a higher yield than they were paying out in the deposits. There's a tightness of monetary policy, and those yields went up and the bonds went down in value. And then the amount they have to pay out went up in value. And so they went broke. And that is happening all over. That happens not only through banks. Banks as a whole did a lot of that, but insurance companies and so on, all around the world. Same sort of thing happened in Europe. Same sort of thing happened with Japanese companies, even buying U.S. dollar bonds a lot. And so you have, if you were to mark those to market, you would have a terrible calamity. But what's going to likely happen is they don't want any more of those bonds, and we're going to have to sell more bonds because we're going to have a deficit. So when you have a deficit, you have to pay for it through selling debt, and there's a lesser demand for that debt. And I think that creates a problem in which either interest rates go up or the Federal Reserve's got to come in and print. And this is a problem that exists also in Europe with the European Central Bank, the Bank of Japan, all of them. So that's where we are. And it has knock-on effects. It's like dominoes that fall. So it will produce less credit. And as it produces less credit, less demand, less credit, that'll produce less spending. It'll come in certain parts of the economy. For example, commercial real estate. For example, venture capital and private equity. For example, low-grade bonds where they have a heavily indebted company and the interest rate goes up a lot, and that causes problems. So I think you're in the part of the cycle where you've had the tightening and the dominoes are beginning to fall. And I think that's going to produce more problems. So I think when it comes down to it, there's just too much debt and we're adding it to it too quickly. And so it's going to either that debt will be paid off with hard money, in which case there's not much printing and so on, or it'll be paid off with printing a lot of money to make it easier to pay off. I think in the end, it's always the case that they print a lot of money and make it easier to pay off, but you have the reduced value of money. So that's how it looks to me. You'll have probably a stagflation environment. And because you have that dynamic going on at the same time as you have supply chain disruptions because of the geopolitical, I think it's going to be a difficult environment.